Well, thanks for tuning in to Countdown. My name is Neeraj Shah, and with me are Devina and Navneet, and it's turned out to be a very good day of trade. So let's talk about what's really moving the markets today. Firstly, the indices for themselves are doing well, 2%, not at the high point of the day, but up about 2% for the Nifty and the Sensex, and the Nifty Bank is actually doing very well, led by private banks. But it's not just our markets. Keep in mind, Europe is doing well. So the FTSE CAC DAX have almost near about 3% gains, and the US futures are up and about nearly 600 to 700 points. So good going there for the world markets, as we are a part of a group of indices which are inching up higher. What is leading us? I mean, the market breadth is of course positive, as the heat map will show you, but what is leading us higher and what is losing out? Well, let's talk about the losers first, because there are a few of them which are impacting. So IT certainly out there. Tech Mahindra, HCL Tech and Wipro, all three are in the red. TCS is doing very well for itself, but the others are not quite. HUL has lost out, by the way. It started off marginally higher, but then came off and has stayed lower, 2% lower for a better part of the trading day today for Hindustan Unilever. So that's the other one that you need to monitor. And of course, on the gaining side, aside of banks, firstly, price volume action seen in Eicher Motors, up and about for the third day on a trot, very good volumes. And banks are doing well, as I said. ICICI, Axis, IndusInd, all of them having a remarkable afternoon, after a day of trade thus far. Devina, what about the broader end of the spectrum?
Well, it's NBFC is all the way, Neeraj, and even real estate for that matter is doing well in today's session. The breadth of the market is extremely positive. So 1196 stocks advanced versus about 337 stocks which have declined in the session. I just want to take a look at a few of the bigger movers in the session. First up, I think is the likes of Equitas, Indiabulls Housing, LIC Housing, Camden Homes. These are the names that are extremely strong right now. And then you've got a few more names that are active right now, with the likes of Kolte Patil from the real estate space. You've got Oberoi Realty, you've got Godrej Properties, all of them doing well. Motherson Sumi continues to do well. Second day on a trot. You've got Bharat Forge supporting it. From the construction space, Ashoka Buildcon doing well. Muthoot Finance, we spoke to the management. They are hoping to start off most of their 5,000 branches gradually. They've been given permission to start off operations. From the banking space, Lakshmi Vilas Bank, City Union Bank, DCB and IDFC First Bank. Few losers, Ipca Labs, Apollo Hospital, Torrent Pharma. So pharma space not doing all that much. And then you have a Chambal Fert, which is down and out in today's session. But what else are we tracking? The futures and options space.
Hi Devina, good afternoon. Well, I think the positive takeaway so far has been the premium on Nifty futures side has been maintained. So currently Nifty futures are trading with a premium of almost 40 points, and we've recovered, by the way, from the lower levels, and 9,300 will remain the big resistance on Nifty, at least in the near term. So both Nifty futures as well as Nifty Bank futures as of now have seen open interest addition to the tune of about 12 to 13%, giving you an indication some positions are being added today. The other positive side is, we highlighted this yesterday as well, the volatility index has cooled off once again. So on weekly basis, volatility has come off from levels of 50 to now 43, which is a great sign. And then you've got the options data. I think 9,300 will remain as a key level to be watched in the upside. So 9,300 has been added on, almost 5 lakh shares have been added right now. And on the put side, you've got addition coming in on the 9,100 and 9,200 side. Almost 4 lakh shares have been added. I'm very sorry, guys, for the background noise there. But on the stock futures side, I've got 3 stocks that I want to highlight. Shriram Transport is the one. We've been highlighting how NBFCs have been doing well. So long positions have been seen for Shriram Transport. You've got Ujjivan Financial, both of them seeing long positions. And the other non-NBFC player which is doing well today on the future side is CESC, which is up 4%. And there is significant amount of OI addition that has come on the open interest side, where the open interest has gone up by over 30%. So yes, options data giving you a range of almost 9,000 to 9,300, Neeraj. Let's see where we are headed. So far, the trading session has been good.
Let's ask Kunal Ramya, what is he doing in a scenario like this? He joins in right now. Kunal, good having you. Thanks for joining in. How are you approaching trade right now as we head into the weekend? Would you initiate fresh longs at these levels? And for somebody who has longs, would you recommend carrying home the longs?
Yeah, hi Neeraj. Very good afternoon. So, if I look at the indices, so definitely, yes, we saw a massive gap up open, but unable to sustain at the same level. So, I have already shared a chart with you guys on Nifty and Bank Nifty. So I would request you to just have a look at that Nifty chart. So, right from the bottom, if you look at the entire formation, it's a rising wedge formation, all right? And the entire fall right from the levels of 12,200 to the bottom of 7,500. We saw a reversal that's around 38.2%, and the resistance line of that is coming near to 9,300 itself. And today's top is 9,315 kind of level. So I would not definitely be a buyer at this point of time. Although at the same time, if I look at the entire formation, I've labeled those formations as A, B, and C. So there is a bright chance or a possibility of coming down to make a D and probably then head for E, but that will not surpass 9,500 to 600 kind of zone. That's what is the interpretation as of now looking at the index. So index per se, I'm waiting for the Nifty to break say around 9,100 to 9,000, 9,000 levels for the new fresh shorts to be initiated for. Coming to Bank Nifty, the formation is almost the same, but if you look at the chart again, there I've tried highlighting a symmetrical triangle formation right from the top till bottom. Now the consolidation is a sideways consolidation. Now these are the consolidations which are for time correction. I would not definitely buy, but rather I would wait for the formation to be over. Once it breaks on the lower side, we would think of going short on the indices.
Okay. So if that is indeed the scenario, how do you trade stocks in this current point? What are the names that you are betting on right now, Kunal?
So Neeraj, I have shared again two strategies for the day. The first is Reliance Industries. So you look at Reliance Industries in last just couple of minutes, I guess 10 minutes, it's bounced significantly on the higher side. I've kept a trigger level of 1190 on the futures level. So once Reliance goes below 1190, I'll think of shorting the counter with the stop loss of 1220 at that point of time, keeping the target of 1075. And whenever I initiate that position, I'll think of hedging my position partially by selling put option. Reason being, put option of 1100. Reason being, even if the counter remains sideways, we can at least earn the premium out of it. And on the higher side, till the stop loss is not triggered, we can keep the position open. So that's the first short with conditional levels on the same. And the second is Maruti again. So look at the Maruti broader formation. The consolidation is being seen on the chart. So below 5,300, I would think of shorting Maruti again, keeping the stop loss of 5,400 at that point of time, and with the target of 5,000. But again, to partially hedge, I'll think of selling put option of 4,800 because extreme premiums are available right now. I think that would give us a decent, comfort zone, at least even if the stop losses are triggered.
All right, just stay on with us. Kunal, I'll come back to you, and I want your view on some of these banks as well. But in light of what has been announced by the RBI governor today, it's a big shot in the arm for the NBFC pocket as well in terms of getting that liquidity into the system that they were starved of. We've got Nidesh Jain. He's joining us right now on the phone line. Nidesh, thanks very much for taking out the time. 50,000 crores worth of TLTRO that gets done. Has to be put into the NBFC CPs and bonds, out of which mandatorily has to go to the smaller mid-sized NBFCs and MFIs. How did you read into this move? And while the governor has said that this is not it, there could be more in the anvil. Do you feel for starters, 50,000 crores is enough?
Thanks for having me. So before today, there were a lot of apprehension about the regulator intentions and regulator stance toward NBFCs. There were a lot of concern that whether regulator wants to save NBFCs or not. But clearly he has signaled that NBFCs are important financial institutions. And if you just hear his speech, clearly he indicated that from a liquidity standpoint, they will do whatever it takes. And I think from a liquidity standpoint, one should not be concerned, though you can still question that why he has not forced banks to offer moratorium to NBFCs, why he has started a special refinancing window. But I think what he has clearly signaled that from a liquidity standpoint, they will do whatever it takes to save NBFCs. Now one should start focusing more on the solvency part, and which I think still a very big uncertainty. And no one has a clue of how the asset quality and consequently credit cost will pan out for NBFCs.
Okay. So let me ask you, the additional money that has been given out, particularly to NABARD, SIDBI, and NHB, and for the housing finance companies, is that 10,000 crores that has been given to NHB the additional boost that was much wanted?
Yeah. So if you look at the quantum is not very large, 50,000 crore under LTRO and around 50,000 crore for these financial institutions. And for these financial institutions, they will also lend to banks and small finance banks. So NBFCs will probably get a subset of it. I will not say that the quantum is very large and it will solve all the liquidity situation, but clearly it signals that regulator is willing to help the sector, and they will do much more round of liquidity, especially directed towards NBFC if there is a need arise in future. So till today we were questioning a lot of about regulator intention, banks' intention, whether they want NBFCs to be in the system or not. But I think all those questions should be now put to rest. I think if situation deteriorates, they will further increase these quantums.
And the addition, the clarity with regards to the extension of the moratorium to any overdue payments till March 1st, that will go in for asset reclassification, will not be considered NPAs. That additional leeway that they've given, how positive a development is that?
So there are two parts of it. One is it's a positive from a GNPA classification perspective, because earlier there was a confusion that the loans which are already 30-day past due or 60-day past due, which have not crossed 90 days, but there has been a one EMI or two EMI missing, whether those loans will get classified in NPA even after giving a moratorium. So this is very clear now that those loans will not become NPA, and all the NPA recognition will become a standstill till 31st of May. But at the same time, they have said that banks should provide 10% additional on these loans. I am sure it's not very clear, but I believe that NBFCs will also be required to provide this additional 10%. And that could be a meaningful credit cost impact even in the Q4 quarter, where we were not expecting any increase in credit cost. So some of the NBFCs which are operating in informal segments, which are operating in vehicle finance segments, these NBFCs may have to take additional credit cost even in the quarter Q4 of FY20.
We were speaking to KK Mistry, and he was telling us that while the first announcement brought about the liquidity in the larger NBFCs, this one probably tends to now get some much needed liquidity in the smaller ones. Is there something within your coverage you think which will get a bit of a relief out of these announcements and therefore would probably perform better than otherwise?
So if you look at mostly in my coverage, those companies who are there are very comfortable on liquidity. Most of the companies have said that they will not avail moratorium even if banks give them the moratorium. The likes of Mahindra Finance, Chola, most of the NBFCs are quite comfortable. The segment which was most impacted was microfinance institutions, because for them the collections were virtually become zero. While for other class of NBFCs, you will see at least 30%, 40%, 50% of the customers paying something. For microfinance institution, the collection becomes zero, and they definitely required a dose of liquidity. I am still not very confident that all MFIs will get funding. I think banks will remain very, very choosy and will lend to only very selective MFIs. In my coverage, I think Credit Access Grameen is one stock which should benefit from this. But I still think that banks will remain very choosy in lending to MFIs, because at the end of the day, credit risk still lies with the bank. They can use this money from RBI, they can lend to MFIs, but if MFI defaults, it's the hit that banks will have to take.
I mean, why risk so much of exposure for a 25 basis points move? Just one very quick view, because we got, I think, Shriram Transport waiting by as well. But just one quick thought: does HDFC tend to get materially impacted because dividend doesn't come now, but might come, say, maybe in September or October? Disbursements are anyways not happening as much, right?
Yes, so HDFC, from this announcement, I don't think they will have any much material impact. I don't think there will be a material positive impact because of any of these, because they were already quite...
What I meant was, because the dividend doesn't come in from HDFC Bank until September, that's no material impact for HDFC, right?
No, that's not a material impact for them. Anyways, they are quite comfortable on the liquidity standpoint. So,
yeah. Okay, great. Good having you. Thank you so much for taking the time out and being with us and giving us your thoughts. Appreciate your time.
Thank you. Thank you.
Okay, now just before we get in, Shriram Transport, Kunal, can I ask you for a quick perspective on two NBFCs which came off? You'll have to make this quick, Kunal, but a view on either Piramal Enterprises or Bajaj Finance.
I would think of Bajaj Finance first rather than PEL. Reason being, Bajaj Finance is still looking attractive in terms of consolidation rather than PEL. So yes, I would go with Bajaj Finance rather than PEL.
Okay, okay. Let's get in a quick perspective from Mr. Umesh Revankar as well. He joins us right now with his thoughts. Mr. Revankar, good having you. Thanks so much for joining in. Well, material, a lot of announcements done. One-time restructuring for real estate projects. I think measures to ease liquidity for some of the smaller NBFCs. Do you get impacted in any fashion as a result of what the governor has said today?
Yes, I think we'll be positively impacted because the TLTRO earlier when it was announced, it was an announcement which was generally everyone was eligible, like large corporates, AAA rated companies, and they raised in the first instance. And the other companies and NBFCs were left out totally. So this separately earmarking 50,000 crores for NBFCs, including small and medium, is a good measure because it is the small and medium NBFCs would definitely benefit directly, and also they would be able to reach out to their borrowers and they can start lending. Because the economy to kickstart, NBFC has the reach to kickstart the economy immediately, especially in the rural area.
So hi, good afternoon. Going with the measures which were announced by RBI, and if one looks at the standstill agreement, there's 10% additional provisioning that.
All right. I think we try and patch Namit back, but Mr. Revankar, just comment on the additional provisions that you have to make. I think that's what Namit was trying to get from you over the next 2 quarters, providing for these accounts, to which you've given the moratorium to. That's obviously a good measure taken by the RBI governor to ensure that borrowers get their bit, but also the banking system doesn't suffer. And you keep a good track that can obviously be reaccounted for and readjusted if there are no fresh slippages. But what did you make of this additional provisioning that the RBI governor has asked to do?
As I understand, it is basically meant for banks because accounting guidelines for banks are given by RBI. For NBFC, the accounting guidelines have changed to Ind AS accounting. So if it is an international IFRS accounting we are doing, so any changes in accounting or additional provision, what we need to make, so that we need to approach the chartered accountant firm, and then we need to do it because for us the accounting guidelines are not coming from the RBI right now. So, however, we'll definitely look into this and understand. We are yet to read the fine prints fully, and once you understand the fine prints, then we'll be able to react.
So obviously, the question was also from a standpoint of just the move and how the fact that the governor has made sure that there is accountability, even though you are giving moratorium, not specific to the NBFC space, but for the NBFC space, sir. What I wanted to ask you was, do you feel that Q4 for a company like yourself, because of this extended moratorium and the overdue loans as of March 1st also get the moratorium, that can provide us not a significant, but at least a minor buffer to the Q4 performance?
Yeah, definitely, yes. It will definitely change the NPA, the accounting standards, and our NPA provisioning will be much lower. So definitely it's a buffer to our Q4 results. But going forward, as far as NBFCs are concerned, most of us, we lend to earning assets. So we have all the loans which is asset backed. So a 1 or 2 or 2 months or 3 months moratorium to these customers which are asset backed will not really result in deteriorating or to call asset quality for us. So we should be able to collect the money in the real time once the economy bounce back. So I don't think it will change materially for us, and we should be all the NBFCs who are doing asset-backed lending should not be having much a challenge because of the moratorium.
So have operations for you started in your branches? And just to get a sense from you as to how much do you expect your advances to get impacted, say in Q1 of FY21, if this has a lingering effect?
Yeah, lending-wise, we will be handicapped because we are not operating our offices. From 20th or from Monday, most of the offices would be restarted. At the same time, for our business, since it is mostly against vehicle transfer has to take place, endorsement has to be done, where the government offices has to be open. So unless that is completed, we will not be able to lend. So the April month lending would definitely be much lower than what we would have planned. But May and June, we should be able to function fully. So this month, our focus will be more on collection wherever it is possible, wherever customers are comfortable in paying, because some of the essential goods were moving right from the day one. So some of our vehicles are engaged into that. So I feel wherever vehicles are running, they are earning. We should be able to get the installment without waiting for the moratorium. So our focus for next 10 days would be more on collection, and then look at possibility of lending and depending upon the market situation and the liquidity, we can increase our lending in next 2 months.
So just one question from my side. There was also a development today where S&P has lowered the rating. I remember December last year, they had just changed the outlook to negative, and now they've lowered the rating to double B from double B plus. What impact will this have on your cost of borrowing and also on credit cost? Does that mean you will have to step up more of provisions? Because I remember last time they had said that your stage 2 loans had increased a lot to 22%, and this was back in September 2019.
Yeah, subsequently post-September, the economy had improved a bit, and by December, because of good rains and good activity in the rural places, the collection improved for us, and the stage 2 came down by 200 basis points. And we were hoping that this quarter would be, that the last quarter would be much better. But because of this unfortunate pandemic situation, we could not really do our best. But however, the rating downgrade is more, it is international rating, it is not Indian domestic rating. And the way the internationally the rating agencies are looking at India is little on what I should say defensive means they feel that if Europe and US can suffer, why not India? And maybe India will, with the lag, will suffer more. The spread will be more, and the economy may not improve at all. That kind of impression they have, but we have tried to convince the rating agencies, saying that India is a little different ball game altogether, because what happens here is we have arrested the spread much earlier. We had a lockdown, so we'll also bounce back faster. And the rural India has not suffered at all. Only the 30% of the population or geography where the hotspots are there, that is getting impacted. So we feel that in India, we should have V-shaped recovery, maybe with a lag of 2 or 3 months from now. If the monsoon is normal, which is the IMD has predicted that the monsoon will be normal. So we should get back to the business. And right now the harvest season is on. where all the winter crop has come. The crop is bumper. So I think rural India will do much, much better and will be very active. So I don't think we will have that kind of a challenges as the Western world. So once they see that, once they see the number, once they see the improvement, progress India makes, that international rating agency will change its opinion. Is what we feed. Maybe next 2 quarters they will be watching us, and if we are able to show good progress as an Indian economy, they will change the rating, upgrade the rating.
Right. All right. We thank you so much, sir, for joining us and taking us through your views on RBI's announcement and what lowering of rating by S&P, what sort of an impact will that have on Shriram Transport? But remember, for the time being, all the NBFCs have been doing well, and particularly for Shriram Transport, it's the 3rd straight day of gains that we're seeing, and also there are a lot of positions that are being added on the long side. But let's get more views on this space since it is the hot topic for the day. We've got Anand Tandon, market expert, who's joining us. Hi, Anand. Good afternoon. Well, RBI categorically said this is not it, and they are monitoring the situation very closely, and they will come up with more announcement if and when required. What did you make of it, and particularly the rally that we're seeing for these NBFCs? These are beaten down stocks, and for some respite coming in with regard to TLTRO, which was announced of almost 50,000 only dedicated to this space.
Well, yes, it's certainly some amount of relief. However, as you mentioned, I don't think that this will be the end of it. While RBI has refrained from putting out more numbers, clearly, many of the NBFCs now are fairly large and system-wide. The amount of loans that they have given, large amounts of which are unsecured, are very significant in number. So, to assume that 50% going to smaller and 50% going to larger, one of the large NBFCs would have, let's say, a 1 lakh crore book, and if you assume 10% has some issues in terms of repayment, you have a very large number. So we're not going to be adequate by far, but at least it is a step in the right direction. And as everybody else has said so far, the fact that RBI has mentioned that they are willing to look at these numbers itself is somewhat encouraging.
Anand, do you think the rally that we're seeing for all these stocks will last, or it's just temporary?
I think the rally is pretty much determined on what's happening globally, and to some extent, the fact that there seems to be Gilead drug coming through, and the U.S. market having become a lot more buoyant is probably what is also driving some of the emerging markets, including India. I think our own numbers are going to be fairly disastrous, especially the government numbers, and the expectation that the market seems to have that the government will come out and bail out a lot of corporates, to my mind, is going to be largely belied, because the kind of numbers that the government needs to put up for just taking care of poor people who are migrant, who have no jobs and so on, that, in my view, that itself will run into more than ₹1 trillion, maybe ₹1.5 trillion. So with that kind of number, I doubt very much there is very much headroom, even after you relax financial guidelines, to actually allow for too much support of the corporate sector. And I think as the earnings season progresses and more companies come out and give guidance, maybe some of this euphoria will perhaps subside.
Let me just close the loop around the financials and the banking stocks as well. Nifty Bank, by the way, has recovered, so it's trading back above the mark of 20,000. It's going to be very crucial to monitor whether Nifty Bank can close above that mark, because initially, I think twice or thrice in the last few days we've crossed that mark, but there was a bit of profit booking which comes at these higher levels. Kunal, would you want to come in on Axis Bank? It's up 9% in trade. I'm not too sure if you've already given your view on this one, but if not, would you take a bet here?
No need. Again, if I look at the entire formation, there are only a couple of banks, that's ICICI and I guess Axis, which has come out of that entire consolidation. And today is their winning day. Definitely, I think, Axis Bank may just continue till around 505 or say 500 kind of zone. And on the other side, ICICI may just continue rally till 390, 395. But again, if I move on to higher degree time frame chart, I think the bottom still remains pending to be formed. And I would wait for a decisive dip before accumulating in my portfolio for a longer period of time. But trading point of view, yes, certainly, the steam is definitely left.
Just keep in mind though, the short-term yields have actually cracked in the markets. So the 1-year GSEC yields have fallen by 20 basis points. A 3-year and the 5 years too have corrected by 30 and 20 basis points respectively. So yields have certainly reacted today. But Pritesh is here, and since we're talking about that, or the banking and the financial space, Pritesh, one quick thought: are you trading any of the private banks on the upside today? Would you take a trade right now into any of the banks or NBFCs on the upside for close?
Now, see, we were of the opinion at the start of the month that the right way to approach this market would be to go long on Bank Nifty and short Nifty. You can call it a ratio trade. The ratio was available around 2.10, and right now it is inching towards 2.21. To take a trade at this point, it won't be a right approach. Saturday we also have announcement of HDFC Bank. We don't know how market will react on Monday, but definitely, the way the things are shaping up. FMCG, Pharma were the early reads of this run of the index run up, and they have taken a back seat now. It's the run of financials and banks. The way Bank Nifty is outperforming index, it tells me that there is more in store. And talking about ratio chart, which I mentioned earlier, I won't be surprised if this ratio goes higher to 2.35 also by the end of this month. So I think these banks would have more fuel, going ahead.
Well, that's a view as well. But take a moment, Kunal, to thank you for joining in today and giving us your thoughts. Really appreciate your time. Anand, since we are talking about rate sensitives, just a follow-up before we start getting in our queries, our viewer queries. Just a follow-up question. There seems to be some frenzied buying that we're seeing in the auto names. I don't know if it's coming out of the confidence that some of the automakers like Maruti or Motherson have displayed, saying that their buying will bounce back, or just that they were beaten down so much. But Eicher is a case in point, Motherson a case in point, Bosch a case in point. What's your thought here?
Well, I have no reason to assume that there is going to be any positive news coming out of the automakers. By and large, those which are supplying internationally, like Motherson or even Tata Motors, for example, are looking at steep cuts in terms of demand. And in the domestic market, as you well know, that there is going to be zero sales for this month. So, you are really looking at the next year, and even the last quarter would have been nothing great. Maruti's figures are there for everyone to see. So I think the market is just refusing to recognize the kind of enormity of the problem that we are facing. And of course, many of the mutual funds are of the view that we should not worry about 21 earnings and we should start looking at 22 earnings, except that I don't see on what basis you're going to project 22 earnings, because pretty much the earnings of 21 itself are up in the air, and I don't think anyone has a handle quite on how far they will go. All one can say is that you are going to see a degrowth. And if you look at a degrowth, you assume that this year you have a 520 rupees EPS, let's say, for the Nifty. If you assume even a 10% degrowth, you're already trading at 18 times, 20 times next year, the current year earnings. So even if you assume that you were to have a 15% growth based on that, it's not very cheap. So this entire assumption that the market is somehow trading very cheap based on earnings is not true, despite the fact that the earnings itself are going to be somewhat muted because the corrections haven't been made yet. So broadly speaking, the entire market move, as well as specifically things like auto, auto, whenever the market recovers, will be one of the last sectors to actually see a pickup in demand. It's a different matter. The stock price may have performed very well.
Right, and Anand has almost answered a part question that we had from one of our viewers. The other part of the question that's coming in from VT is on TCS. Anand, how do you read into TCS's numbers? While they were better off compared to Wipro, and the commentary suggested that normalcy will come back only in the December quarter. Ahead of that, then what would you do in terms of taking a position in TCS?
Well, obviously, it's among that sector. It's one of the the more expensive stocks. If you really have to be buying in that sector, I would argue that you may be better off perhaps buying something like an Infosys or even an HCL Tech or Tech Mahindra, where the likelihood of for the latter two, because of communications, etc., there is a likelihood that the demand may not be that badly affected. Frankly, as I mentioned a while back, it is almost impossible to make an estimate of where we are going to see demand and how much and what kind of numbers we are going to estimate for any of the companies. So any spreadsheet analysis is actually just a figure picked out of the hat, and based on that, it's very difficult to make an estimate of whether it's expensive or cheap. Purely from a point of view of saying asset allocation and therefore a portfolio, IT is definitely one of the better sectors to be in, and TCS is one of the best managed companies. So from that perspective, if you have got some allocation for IT, let's say it's 15%, or maybe perhaps at this stage even more, then obviously TCS will make up maybe a third of that.
All right. So I hope that answers your query, VT. Maruti, not so much so, but if you have an IT allocation, TCS is where it should go. I think Sachidanand Uttekar is also joining us in right now in this conversation, and I want to go to my next query that's coming in from Anand Kumar. Sachidanand, what is a good level to enter into Bajaj FinServ? Not finance, FinServ.
Good afternoon. Well, I think the way this particular stock has been performing, I think it is more in the consolidation band itself. The healthy sign is, the closing should be somewhere here 49.80, 49.50 should be a good zone. So probably in case someone wants to really, play this particular momentum, then they can bet more on the long side. The stop loss for the trade should be placed at 49.55. And when it comes to the upside, I think, we may see the momentum getting extended towards the 53.50, say, next couple of trading sessions. So as of now, it has been in the consolidation mode. If this closing is confirmed, then probably we may see a sharper move immediately on Monday's session itself.
Okay. The next query is coming in from Mihir Joshi. And Pritish, I would want your view on this one. He wants to know, get a view on CESC. What would you do with this stock? Are there any trends that are suggestive here?
Now, see, this stock, in fact, has bounced back pretty well. Now, I'm expecting this pullback to continue. In fact, I think I won't be surprised the way the stock has corrected. The pullback is going to be extremely swift. So yes, 625, 650 appears to be my next projection for the stock.
I think my last question is on Affle India. And Anand, while we've been talking about this entire gamut of stocks, with the online digital business that have been affected tremendously in this lockdown, what do you make out of Affle? It was one of the stocks to really run up along with IndiaMart Intermesh, but it's corrected also. Do you feel it's the right time to look at Affle?
I'm sorry, I didn't get the name of the company you're asking me about.
Affle India, Affle.
I didn't think I got the name. I don't have a view on that.
Okay, all right. Nonetheless, Affle has been one of the more expensively priced businesses along with IndiaMart, Intermesh, IRCTC. I think as a combo, this entire pack had started to run up ahead of the lockdown. IRCTC, though, did correct. Affle corrected even sharper. But in the last few days, you've seen some recovery coming in for Affle as well. Today, it's locked up on upper circuit. So, if at all, we do see in the next few days and some trajectory, Affle, as you can see, last 7 days is up 40%. Similar graph to IRCTC. So all of these stocks have been locked up on circuit after circuit. What would you do, Pritish? Would you buy into an Affle if the circuit it opens up and it gives you an opportunity?
I won't be looking into this stock right now because see, we are looking at the start of the show. I did mention that financial and banks could continue this momentum. So there are better opportunities. There are earlier draggers which are now participating in the market. So this is a chance to get back into this stock. Something like Axis, ICICI, HDFC Limited. So this stock attracts me at this level right now.
Okay, that's a couple of your viewer queries that we've addressed, but can't shift focus away from the financials. Nifty Bank, I believe, is now at day's high, up 6%, 20,555 is where it's trading. And owing to that, you've got, of course, good recovery coming in for Nifty as well, 92.44. Remember, today's high is about 93.25, so that will become your resistance mark. And contribution is actually scattered today, so 50 points. The gains that you're seeing on Nifty are being contributed by ICICI Bank single-handedly, and you've also got Reliance Reliance Industries, I guess, which is sitting at days high with gains of about 40%. But remember, the other stock now among the banking space that we're going to be watching out will be HDFC Bank too, which is up and about just ahead of its numbers. We've already got a cheat sheet in the form of quarterly update that they've already reported to the exchanges. There was advances growth, good at over 20% on year-on-year basis, and we did see some growth coming in with regard to deposits as well on sequential basis. We'll quickly tell you what are the expectations from the analyst this time around with regard to HDFC Bank. Shefali is joining us to take us through that. Shefali, what are we factoring in with regard to the earnings this time around? Will there be any sort of COVID-led disruption or not?
Well, actually, it was a very strong quarter. Headline numbers, that is the net interest income figure and the profit figure. It could be a very muted quarter for the bank this time around, with net interest income growing by just 13% and almost a 4.6% growth on a sequential basis. And profit is expected to jump 23% on a YY basis, but a degrowth of 2.2% on a sequential basis. So we need to watch out for these figures. They updated the CASA ratio as well. So they did see apparently a bit of a benefit coming in terms of the crisis that we saw at Yes Bank. So apparently some amount of retail deposits might have shifted there. So their CASA ratio stood at 42% at March end versus 39.5% at the end of the December quarter. Asset quality will be the key thing to look forward to, and the resultant provisioning as well. Some estimates being put out by one brokerage, Phillip Capital, gross NPA seen at 1.54%. That'll be an inch up of 12 basis at about 0.55%. That'll be because of any resultant, higher any floating provisions in anticipation of deterioration in the asset quality going forward. And the commentary as well will also be very important. What's happening with the retail asset quality, especially the unsecured, with the
connection, which Ali is. The connection is not so great right now, but I'll just sum it up for you. Of course, all eyes will be on the commentary with regard to how the quarter went by, and basically going ahead, what sort of disruption do they see, and also the sort of measures with RBI has announced, how does it impact a bank like HDFC Bank? And of course, we will be looking at asset quality. That's a very important metric to watch out for any bank's numbers. But ahead of that, HDFC Bank definitely doing well. Let's just pull up the chart of that. Sachtanand, you want to quickly come in before the numbers which are scheduled tomorrow? Would you take any bet for Monday?
Well, if you look at HDFC Bank, I think I would prefer avoiding it right now. But definitely, the structure has been improving. If you look at the entire data sequence, we have seen a major shift at 850 strikes, and the way the swing has been shifted to 850. I think the immediate hurdle for the stock is around 1,000, and probably we may see this particular move getting extended towards that. But since we avoid trading results, I would give it a pass. But within the similar space, I think ICICI Bank is still giving a very good opportunity the way it has been placed. We are expecting that around 390, 395 kind of a zone should be achieved. So from a BTST perspective, I think the reward to risk is also good in ICICI Bank. The stop loss for the trade should be placed at around 362 when it comes to spot. And I think longs can be considered in ICICI Bank.
Okay, so ICICI Bank is a preferred pick within the private banking space. The other pocket which is doing well is the Nifty Auto Pack, up about 4.5%. And look at Bharat Forge, it's up 18% in trade. You've got something like Eicher Motors also up and about. Remember, we were highlighting how Motherson Sumi has been recovering post the updates that they've been giving, and that one too is up another 6.5% in today's session. Anand, a good recovery seen for all these auto companies, but not to forget, last 1 year they're beaten down. Valuations have also corrected a lot, and there is one more school of thought that, post this COVID-led disruption, people may not want to buy discretionary, but that may not be the case for autos because people may now prefer to travel in their own car. In light of that, do you see any sort of revival coming in the near future? If yes, any valuation comfort in any stock that you get?
Well, you have to remember that India is not a very rich country. It's not as if people are not buying cars because they don't want to, and they prefer to travel in public vehicles. The reason they're not buying cars is because they can't afford them. And now with the kind of hit that we have been taking, the likelihood is that the affordability index actually has become worse. So if at all you're going to be buying, look, let us be clear. COVID has not yet been beaten. We are still looking at a lockdown situation which may be taken off. It is very likely that once the country comes out of lockdown and people start mingling, you will see a surge again. We don't even know if there will not be another lockdown, let's say a month down the road. The last thing somebody would be doing is buying a vehicle at this stage, because even if you have to necessarily go out and travel on your own, you'd probably buy a two-wheeler. So as I said, among the discretionary space, I would assume that the auto sector will be the last one to recover, or at least a fairly delayed one. Within that space, if you are really looking at something that could recover early among the passengers side, it would be the two-wheelers in my view, and that too the Janta two-wheelers, not the premium two-wheelers where you're talking about 300 and 500 cc bikes. So you're really looking at 150 cc and thereabouts kind of thing, where maybe the auto companies, the scooter companies and motorcycle companies which are in that space are probably better position. On the other side of the auto, I think the only other numbers which look somewhat attractive till February were the tractors, and that is likely to perhaps continue because agriculture is the one place where we haven't had a hit yet. Even that will take a bit of a hit because financing will be a problem, but maybe it will be less so than many of the other sectors. For the rest of it, I think the next 12 months you can forget about it.
Okay, got that. Arun, stay on with us. Pritesh, since we have to let you go, if you want to quickly give us a closing strategy for, Monday session for next week, what would it be?
Yes, now I have a couple of buy ideas. First one is Reliance. Now, for a while, this stock has been, unable to cross a hurdle of 1230 in last few days. In fact, now I feel that this is the right time for stock to do so. We can see on Ponder figure chart double top breakout taking place. Even the bearish pattern has reversed. In fact, I can see that on the shorter time frame there are multiple positive patterns taking place, which tells me that a move towards 1310 is possible. And second one is a buy on PFC. Now this stock in the month of March went low around 78. Thereafter it consolidated. There was not an immediate pullback, but yes, it consolidated. And now it is showing signs of providing a sharp rally on the upside. So we can see bad rib variation taking place at the bottom. Thereafter, triangle breakout at the bottom on Ponder figure chart. And I'm expecting follow through movement to the upside. So buy for a target of 105.
Okay. That's a few stocks to keep in mind. Pritesh, we'll let you go on that note. Thank you so very much for joining us this afternoon. Also joining in is Mayuresh Joshi. Mayuresh, good afternoon to you. And before I get on to conversations about individual stocks in the financial space, I want to focus on one pocket which has been the hub of all the activity recently, and that has been the FMCG space. You've seen stocks like ITC just on the back of valuations being so attractive, seeing that big little bit of a bump up. Nestle, Britannia, HUL, MSCI rebalancing, maybe the reason, but the stock has moved up. And then DMA, you have an Avenue Supermart where it is running at a 50% store capacity, and it's still not far away from its all-time high. So that premium still is intact. What would you do with an Avenue Supermart?
Afternoon, Devina. No, you're absolutely right. I think the entire pack has been moving on the premise that the earnings hit that this entire pack will take will be far lesser than what most of the economic sensitive packs will probably have to bear in this quarter and the next. Having said that, for Avenue Supermarts in particular, you're absolutely right again. I think 50% of the stores are not functional at this point of time. Even within their sub-segmental performance, around 55% is what actually comes through in terms of groceries and day-to-day needs or the essentials, as we call it at this point of time. So again, I think the kind of volume growth that we're expecting specifically from this segment, I think should hold up pretty well. However, I think the earnings hit will still be there for Q4, Q1. It is not like valuations are ultra cheap at this point of time. So I think the market is trying to find some solace and some comfort in sectors like FMCG, in sectors like pharma at this point of time. But FMCG in particular, I think supply side constraints are still very, very evident. Packaging is still very, very evident at this point. They might just ease out over the next few days as the lockdown pressures are eased. But valuations in my opinion are sky high for DMart at this point of time, assuming they're working at 50% capacity.
Stay on, gentlemen, just to get in a closing idea. I think we're already at 10 minutes left to go. So, Sachidanand, you have any closing ideas?
Well, one of them was ICICI Bank. In fact, we have already discussed the trade setup, but the way Bank Nifty has been moving and performing, last week when I was on your show, it was quoting somewhere close to 18,300, where we had given an opinion of positional trade for a move towards 20,100. And today we are seeing that particular level has been achieved, and the Bank Nifty is closing about the same. So we are expecting that there could be a further sharp momentum in the coming week, and probably from a BTSC perspective, 21,500 level should be achieved. So the stop loss for the trade should be placed at 20,300 from here on, and longs should be deployed in Bank Nifty for a final target of 21,500. ICICI Bank, the setup stays valid. 395 is the target. On a positional basis, the stop loss remains at 362. And the last call would be Blue Star, where we have seen a fresh breakout from a cup and handle formation. There's a very strong positive divergence on the daily scale. We're expecting that this move should continue towards 590 level. The stop loss for the trade should be placed at 510.
7% for the Nifty Bank, and that's quite telling, right? And which is why I think Sachidanand's call on going long on the Bank Nifty or an ICICI Bank. I wonder, though, just a quick follow-up. Why not an HDFC Bank that is lagging the peers today? Can it do more? Sachidanand.
Well, Neeraj, as we discussed, we are looking at a move towards the 1,950 kind of a zone immediate during this particular expiry itself. But since I have a discipline of not trading the result, so in case if someone is wanting to participate this particular move, the stop loss should be placed at 880 is what I have recommended. But on an overall basis, we are optimistic on the counter. There has been a gradual shift of base, which was earlier established at around 780, 800 kind of a zone. That base has shifted to 850. So it's a good sign of a sign of trending move being established. So it's just a matter of time when we'll see a breakout in this particular stock and a rally towards 1,000. But definitely, since we follow that protocol, so I'm not initiating any trade setups in HDFC Bank, but I've given a choice of trading ICICI Bank, where we have been consistently going long. And I think, we've discussed ICICI Bank when it was somewhere close to 320. And we continue to ride this particular move, and the expectation of ICICI Bank towards 395 still remains open. So probably looking at the way HDFC Bank is going to move, one can take a similar bet in ICICI Bank.
Yep, so Bank Nifty, ICICI Bank not wanting to play the HDFC Bank numbers. By the way, 7.27% up for the Nifty Bank. It's been a roaring move today. And now the Nifty and the Sensex mirror what the European markets are doing as well. The broader end of the spectrum too has a clutch of these names which have done so well. Anand, maybe we discussed this already, but so many people would want to know, is it prudent to stick to the larger names right now if you want to bet also on the markets? Or would you even look at a federal bank or a DCB? Frankly, if you look at a clutch of important ratios with which you can value these banks, federal bank is not all that bad when it comes to a lot of comparisons with some of the larger peers.
Well, yes, on a pure valuation basis, Federal Bank is probably trading at less than one-time book value. But then you also have a situation where an SBI is trading at 0.9 if you strip out the, even perhaps without stripping out all the subsidiaries. And maybe an Axis or an ICICI is not very far, maybe 1.5 times and so on. So the question at this stage is that, for the additional risk that you are taking to the smaller banks, are you being adequately compensated? And I would argue that perhaps not so. Do remember that, we are in the recent presentation by Mr. Kant at CII conference, they had indicated that the likely impact on banking sector or on the lending sector of this COVID would likely be another 10% increase in NPAs. So at this stage, you don't want to get into banks where the balance sheet is so weak that if you do get a shock like that, and that number comes to be anywhere close to the truth, then you are again scrambling for money, because at this stage, capital is going to be difficult to get. So well-capitalized banks with large balance sheets is probably a better bet.
Capitalized banks with a better balance sheet could be a better bet. But for the time being, you've got Axis Bank, which is up 15%. It's your top Nifty gainer. And Sachidanand has already given his call within this space. That's an ICICI Bank. But Can't take off your eyes once again. NBFCs, guys, Equitas is up 23 to 24%. And not to forget, these are all your beaten down stocks. So the rally, it went down also quite sharply. It's a short covering bounce probably that you're witnessing. Shriram Transport is at the highest point of the day, and it's the third straight day of gains. Indiabulls Housing is also up in about 19%. Ujjivan is the other one, which is up about 15%. Mayuresh, I can go on with the NBFCs today, but anything in particular that you're tracking here with the sort of bounce back that we've seen for the sector?
No, sir, absolutely right. I think there might be an element of short covering that has probably happened. What has also happened in terms of the extended LTROs that RBI has announced, the infusion that will come through either through NABARD, SIDBI, and so on and so forth, of 50,000 with a 50% allocation for the mid-cap NBFCs at play. I think that's a strong move, and that's a strong messaging that has probably gone through. But what probably happens to the moratorium of 3 months for NBFCs, I think that still remains a huge question mark, and how does that get accounted for? Having said that, I think the entire scenario in terms of the end lending and breaks put on that in terms of the lockdown, in terms of provisioning required, in terms of asset quality pressures, specifically towards the beaten down sectors that the NBFCs lend to. I think that might be some concerns which only the results will be able to play out. So yeah, I think that's been a strong move for NBFCs today, specifically after the RBI announcement. But I think a few stocks might be kept on radar. So I think it's a watch list that we probably are making at this point of time. So something like a Canfin Homes, for example, LIC Housing, might be there on the watch list, but only on the watch list. Unless the results come out, I think there is no justification in going out and buying them.
Okay, just before we start wrapping, I just want to take a technical check on a couple of these stocks. So Sachithanan, if you could come in on CESC, there is a huge amount of OI build-up that I can see, over 30%. The stock's also up about 13%. How is it looking on the charts? Do you take any fresh bet on this one?
Well, definitely, the stock has been one of the strongest within the entire power pack. And if you look at, placement, even right now, the momentum can stretch towards 600, 603. But I think the reward to risk will not be suitable for someone to take fresh bets. But definitely, if someone is holding on to this particular stock and also on the long side, then I think they can carry it forward and review the stock around 600. So right now, the future is quoting somewhere close to 592. So 600, 603, I think that is the maximum that we can expect, in the coming week as well. But once we have a closing, being established about 605 or 606, then probably we may see another accelerated move towards 655. But as of now, the immediate target would be around 600, 605, and one should book profits out there. But fresh trades should not be recommended because of the reward service.
Okay, one quick point. I know you've said Nifty Bank looks better, but if somebody initiated a long position on Nifty today when the markets came off its opening levels and right now are sitting in the money, would you advise that trader to book profit right now or carry forward the position to Monday? Do you see this rallying continue next week as well?
Yes, definitely. In fact, one should carry forward their longs. In fact, the way prices are closing above the short-term averages. In fact, we saw a very strong opening. The decline was also healthy. In fact, 9100, that particular level was again respected, and again we have seen a strong recovery, and we are almost going to close near day's high. So definitely, one should carry forward their long positions. When it comes to Nifty or the critical level for Nifty from here on, I think that is around 9540 on the spot, and probably that will be a level wherein next week one should review their long.
Let's start wrapping up the markets. Really good show by the Nifty Bank, up about 7%. Nifty and the Sensex about 3.5% apiece. And banks all the way, really. But you have to say that autos are chipping in as well. So Axis Bank 13%, Eicher Motors about 10%, ICICI Bank, Maruti Suzuki, IndusInd Bank, and Bajaj Finserv is back to 5,020 odd levels. So really strong show put up by this one. Never mind the fact that Bajaj Finance has been choppy. Finserv has done a lot better. Must say RIL and TCS too chipping in, which is great. And HDFC Bank, while ahead of results tomorrow, up about 4%. There is also talk of the CEO conversation happening there. Nestle is correcting, HUL is correcting, Sun Pharma and Tech Mahindra and Cipla is in the red. So essentially the defensives have taken a bit of a backseat in the session today. That's the large cap action for you. Navneet, what about mid caps?
Good going, Neeraj. Mid caps also surging in trade alongside the frontline indices. And actually, for Nifty, we've got back-to-back weekly gains coming in for the first time, Neeraj, in the last 2 months. So definitely some revival from those levels of 7,500 that we've just seen in the last 1 month. And also, volatility is cooling off. So from those high levels of 86, which we just saw a month back, we're at 42 now from 86. So volatility has also cooled off quite substantially. But in terms of individual stocks which performed today, the list will be dominated by NBFC. So you've got something like Equitas, which surged almost 25% in trade. Shriram Transport was also up and about by 20%. Indiabulls Housing, one of the top F&O gainers, saw gains about 20%. And you had something like Bharat Forge that also staged a good comeback today. That stock rallied about 19%. CESE, we've been highlighting in the show, there was a lot of OI addition which came within this particular stock future. So 13% higher here as well. And then you had Bandhan Bank, which was up about 10%. Besides that, even ICICI Prudential, by the way, had a good session, which was up about 10 to 10.5%. Of course, there were some losers as well in today's trading session. You had Havells, which was down 3%. Dabur did not have a great session. I think when markets are moving higher, you will see some bit of profit booking from a couple of these FMCG companies as well. And within the same pack, you had Godrej Consumer also falling by about 2 to 2.5%. McDowell's has been weak in the last few sessions. That's United Spirits, which was down about 2.5% in today's trading session. So net, it's been a good week, and for Nifty at least, and back-to-back second weekly closing coming up almost in the last 2 months. Devina, but in terms of contributors, of course, goes without saying, majority of the gains that we're seeing on Nifty have come in the banking stocks, and also, of course, Reliance Industries, which is up 5%.
Yeah, they are top 4 performers, but the 5th one is TCS. And TCS, they wouldn't have probably anticipated the way things went with regards to, they were okay on their quarterly performance, but the fact that they said that normalcy will come back in December, maybe you would have anticipated some little bit of, a retreat, but the stock actually doing quite well. And 23 odd points from TCS. ICICI Bank is a star performer in the banking lot, contributing 52 points to the index this afternoon, along with Reliance Industries, which is at its heel. And HDFC Bank, with the 4% uptick, is contributing about 36 odd points. On the losing side, what's not done all that much is HUL, Sun Pharma, Tech Mahindra. So some of these names which are up and active in the last few days, Titan, have all looked weak, but the quantum is very low. But the focus should remain. So the broader market is doing well. The breadth of the market is positive almost on a daily basis for the last 7 to 8 days. Trading sessions, the breadth has been positive. And the weekly close, that is also on the positive side. So we've got a 1.5% bump up on the index. Remember, it's been a truncated week. IndusInd Bank has gained closer to 20%. We've got Hindalco for the week gaining 16%, closer to that. Larsen & Toubro has been the surprise package. Axis Bank add-on today's move as well, and the stock's up about 15% for the week. Cement, ICICI Bank, Vedanta are some of your bigger gainers. Amongst your losers, Bajaj Finance, that's still trotting along. It's down about 9% for the week. Hero MotoCorp, Kotak Mahindra Bank, Tech Mahindra, these are some of your losers in the session over the last month. Sachitanan, a quick closing thought from you before we wind down.
When it comes to Nifty, we have been focusing on the trade on the long side itself. In fact, if you look at the last week, we saw this current week was more about consolidation, and within this particular consolidation, we saw some radical shift on the when it comes to the option traders. We saw a dramatic shift in their positioning, and 9,000 now has become a very stable base. So probably we may see this particular move getting extended towards 95, 80 is what we have discussed, and probably we may see that particular level getting achieved in the coming week itself. If you look at the performance of the Nifty, it has not only managed to trade above its short-term averages of 5 and 20 on an exponential basis, but it has also closed above it. So probably we may see some very strong momentum in the coming weeks.
We'll let you go on that note, Sachitanam. Thank you very much for joining in. Anand, I want your quick comment on, as we go step into next week, some more bigger results will come out. You have Infosys coming out. You have Reliance coming out on Friday. How will you position yourself ahead of those? Are we bracing for a bigger impact?
Well, at this stage, the individual results are likely to matter less. What's going to matter perhaps is what kind of outlook the companies are willing to paint, and whether they are going to be more precise than perhaps TCS, for example, among the IT, where they can actually, or Wipro, where they were unwilling to make any kind of forward-looking comment at all. So if that's the kind of scenario, it's very difficult to take a call as to what the companies will actually perform. Broadly, I think the market has had a very good run and the bounce has been very strong. At this stage, I would recommend that most investors should buy some protection, even if that means that you have to go out and buy puts, at least protect some of the profits, because I'm not sure that this kind of rally can continuously sustain.
Anand, thank you so much for joining in and staying on the show. Thank you so much. Mayuresh, would you concur? Rather than, hedging your profits, would you say that you could also look at booking profit and taking some money off the table?
I think in either case is justified. But yes, I think if you're making a reasonable amount of money in the markets at this point of time, partial profit booking is something that can be initiated by clients who have actually done so. What Anand was basically speaking about, and which I concur as well, I think global debt has hit a new record high. So I think how these adjustments are going to happen over the next few weeks and months, I think it's going to be a very interesting proposition on that front, both in terms of developed economies and the emerging economies in terms of the FX debt as well. At the same time, I think the earnings aspect, as you're rightly pointing out, Veena, I think next week is going to be extremely critical. And though everything and everybody probably on the street has pinpointed Q4, Q1 being extremely soft, I think to what extent is that softness actually getting displayed in numbers will be the something that will do the talking for the market as well. So I think, yes, to make earning money in the markets, I think taking some money off the table is warranted.
All right, Mayuresh, we'll thank you as well. Thanks a lot for joining in this afternoon. And to all our viewers, I hope you have a better weekend. Thank you so much for watching. This is all that we have here on Countdown. From Navneet, Neeraj, myself, and the entire team that's put this show together. Thank you so much and stay at home.